Hello and welcome to the Gold Goats and Guns podcast for October 1st, 2024. My name is Tom Luongo and we have a lot to talk about. It is episode 194. I know it's been a couple of weeks since I did one. I did a whole bunch of them all at once and then nothing. Well, hurricanes, this, that, King Crimson tribute concert, the world blowing up, guests falling through, everything happened. And one of those guests that was supposed to come on a couple of weeks ago, but it just didn't kind of happen, was Tracy Shuchart. And we finally been able to get this thing scheduled. And I was on a Spaces with Tracy that she invited me on last week with Lynn Alden, which I thought was lovely. I really appreciated the invite. I thought we had a good time. And so we're doing the home and home thing if you're a hockey fan. So I'll be speaking again this year at the Expat Money Show put on by Mikkel Thorup, who I had the great pleasure of meeting when I was up in Edmonton earlier this year for Sean Newman's Cornerstone Forum. The event that he's putting on will be from October 7th through the 11th. It's one of the biggest expat convocations in the world. Now, this is a free event, and personally, I'll be speaking there twice, once by myself and once as a part of a panel with Alex Craner and Bob Murphy. So there will be people there like Ron Paul, Doug Casey, Scott Horton. Tom Woods is going to be there. So is Mark Faber. This should be an excellent show, and it should help you learn everything you need to know about crafting a potential plan B, and that's if you need one. Or if you're just looking for a way to preserve some of your liberty and or your wealth at a time as uncertain as this period in history, well, then this could be the show for you as well. This includes things like getting a second passport or preserving your offshore finances. It could just be that you want to invest in some international real estate. The folks that are there will be able to help you with all of that. So if you want to sign up and reserve your complimentary ticket, head over to expatmoneysummit.com and you can sign up there. We have a promo code and the link will be in the show notes for this podcast. So welcome to my house, Tracy. How are you?
Well, thank you very much. And again, thank you again for coming on with Lynn Alden the other week. Podcast was fantastic. Everybody loved it. And so I do appreciate you attending.
Oh, it was my pleasure. I really, again, as I told you, it was the first time I had a chance to meet Lynn. So actually I need to, I'd like to actually follow up on that at some point in the future. So we'll try and make that happen. I think, if you can do an invite for us, that'd be great. But so today is day one of Q4, which is something I've been kind of targeting for a while now as the beginning of things. Because, usually that first week in October is when things start to get weird. If the things are going to get weird, they usually happen in the first week of October because it's Q4 and everybody starts to change their investment focus for the year and set up for the next year and blah, 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 blah. And we're a month away from the election. So what do you see going on? I know you and I talked before we started that, you were thinking in terms of commodity markets and what was happening. I thought just, what are you seeing today? And where do you think we're going to be heading as we go into the election? And then we'll just kind of sharpen the spear as we go along here.
Yeah, well, we are recording this on the day where all hell broke loose, right? Everybody, as far as the Middle East is concerned. So let's talk about the Israeli-Gaza conflict that's turned into the Israeli-Lebanon conflict, which is now turned into the Israeli-Iranian conflict. And I mean, one could say that, Hezbollah is a proxy for Iran, but let's just say that. So today what we've seen rockets fired from Iran. Nobody actually expected that. Everybody thought, no, Iran's not really going to make a move. At least that's what all the geopolitical experts were saying. I always say never. And so, what we've seen, Iran has launched 200 missiles at Israel right now. Not all of them were saved by the Iron Dome. They did have strikes within Israel. And so we're going to see how this progresses. And this kind of came after the fact that this morning, the U.S. just announced that they were sending more troops over to the Middle East, and they were keeping some troops with air capabilities there longer than expected. So things are about to get really interesting, or have gotten really interesting in that part of the world.
I was going to say, it is really interesting. As actually, to be honest with you, I went out and got some lunch and I looked at the headlines for 2 hours, and this is literally the first time I'm literally hearing about the ballistic missile strike in Iran, because I've been kind of sequestered away for the last couple of hours and I'm on backup power. So I'm like, you're talking, I'm reading Zero Hedge. This thing's unfolding in real time. And, it's funny. I had a couple of different people tell me that they didn't think Iran was going to do anything at all. And the people I respect, but I was like, I disagree about this. I think you're wrong. I don't know that. I think this thing goes from here. And, like, you don't kill Nasrallah and then expect nothing to happen.
Right.
You just don't. So, it's going to be a very interesting. And this is one of those things. It's funny. I'm on a mailing list with a bunch of people you would know in the financial sector and whatnot. And we've been going back and forth. And I'll be honest with you, a lot of the older Jewish members have been. I have never seen the level of like vitriol that I've seen and victory lapping that I've seen in the last 48 hours. And I've kept my mouth out of it and saying, okay, run your mouth. Let's see where you go. You don't want what's potentially coming here. No one wants what's potentially coming here. I don't want to see anybody. I don't want to see ballistic missiles falling on anyone. I'm not here to tell anybody who's right or wrong. I don't know about you, but I'm not taking a side in any of this any of this stuff, because there's blame enough to go around for everyone. So I just know that this has a step function escalatory framework is, I guess, the best way of looking at it. It's not going to be a gradual thing. This is going to go from one level to the next, to the next, to the next, and then on up to wherever it goes.
Yeah. I mean, we actually just had Iraq groups that are funded by Iran also just came out and say, if the U.S. in any way, shape, or form gets involved, they're going to bomb the U.S. embassy. They're going to bomb any U.S. troops that are in Iraq right now. And so I think this is kind of kickstarted, and I don't want to sound fatalistic here, but I think we've kind of crossed the point of no return at this point. And I don't think I would not have said that earlier, because I think now everybody's going to get dragged into this. And again, I don't mean to sound fatalistic. I hope I am wrong, but I think this is going to escalate to points that we really don't want it to go to at this point. And
I sadly, when I see what I just saw, and when I think about some of the stuff I heard over the weekend, the Syrian forces attacking American installations, where they're, what's the word I'm looking for? Refineries and whatnot. The attacks on American positions that are defending refineries all over eastern Syria and Deir ez-Zor continuing to go on. Now the Iraqi popular military units, the PMUs, are getting involved. They've been out of the headlines for a couple of years. They're coming back into the mix. Like it's all happening. And then I think what we saw, Yemen or the Houthis claimed this morning that they shot down yet another of our Reaper drones.
And they also attacked 2 new vessels in the Red Sea, an oil tanker and a container ship. So, they're back and forth. But, we just had Israel blew up a bunch of their oil installations, their oil supplies, in other words. And so it was crazy to think that they're not going to retaliate. And so, this is just, it's kind of becoming a giant mess. And it looks like, we've had, everybody, the surrounding Arab nations have tried to refrain, such as Saudi Arabia, Jordan. But, if they get involved, that could escalate to a point where you have, the Houthis attacking Saudi Arabia installations again. And, this could escalate to points. And I hope it doesn't. I hope I'm wrong. But, right. If you're looking at markets, you kind of have to game this out and look at every scenario that could happen. And what does this mean for the markets?
No, I agreed completely. It is. And this is the funny part about it is, like, here we are on day 1 of Q4. And I note that for the most part, everything looks exactly like it did the other day. Right. And yet there are signs that everything's being kind of held together with spit and baling wire. and this is, I know we weren't, I kind of agreed not to talk about bond spreads and the bond market and whatnot, but that's where I've been looking to see where I can find these, to find the sniffs, right, where the market is sniffing out at the edges of what's changing. It's the thing we were all kind of taught by Martin Armstrong. Capital tends to flow before before armies do, and
Right.
right. So I'm noting this morning that the dollar is strengthening tremendously. They pushed oil prices and Brent crude down below $70 or near $70 on the open this morning. Now it's back to 74, but copper has been blowing out to the upside. I don't know if you've been watching copper prices, of course, right? So, I mean, if you want to talk about that stuff, go right ahead and go from there.
No, I mean, we've got a lot of bullish scenarios setting up for April. As you said, you talked about WTI. We had a low this morning of 66.50, which is kind of around support if we're looking at this from a technical standpoint, and then hit 72, backing off right now. But, we also saw indices. We saw ES drop, almost 70 points. Now that's coming back a little bit on the initial news. These kind of outsized moves are where you start getting worried because markets seem to think everything is fine. Inflation's not coming back. Oil prices can drop. Everything's fine, even though the fundamentals don't really support that. Everybody's looking at, what does inflation look like? We've got this beat, says the Federal Reserve. And so let's sell oil, it's not an inflation hedge anymore. And, we're worried about OPEC perhaps bringing on supply of those voluntary cuts, which is, I will say, according to my sources, that headline the other day from FT was complete bullshit. And so,
right. I'm not surprised.
To be kind of frank, which got people even more worried. I mean, this market is so short right now anyway.
Yes.
I mean, nobody's interested in the market anymore. So, we got a lot of things going on in the market. And the market hasn't really cared about what's going on geopolitically for a while now. So one could say, oh, that's already baked into the market. But the fact that, we're up almost 6% today, now coming back down on Iran launching ballistic missiles into Israel. And then subsequently, the ES dropped 70 points. So this to me says that markets are way too complacent.
Yeah, no, I find it really funny. Like, to me, I've gotten to the point now where I'm like, I think the oil markets are fake and gay. And I hate to be like blunt about it, but I mean, I'm saying I hate to be blunt about it. Okay, that's my comedy. Okay, that's high comedy. Okay, I'm sorry, I'll take that back. The oil markets are fake and gay. If you look at the volatility in the last 3 years and the last 2.5 years in oil, since they decided to start draining the SPR in order to bring the price of oil down and to get inflation under control. I'm sorry, but I'm just watching them like bomb the Brent crude market back and forth. I've talked to Vince Lanci and others about this, and they're all like, "Yeah, there are no oil traders left in the Brent crude contract because they ball washed everybody out of their positions. So there's no one left to trade the oil price." And so what's happening is that oil trading is moving off of ICE and moving intercontinental exchange, and it's moving to Shanghai, it's moving to Dubai, it's moving to other places, and that's what's going to happen over the course of the next couple of years. And so we're just going to watch those traditional contracts just go by the wayside because there's no price discovery there, right? And when you don't have a market when a market doesn't do accurate price discovery, it's not a real market, and therefore eventually real traders will go somewhere else. So one of these days, I think we're going to see. I've been saying for a long time, Trump goes on and on about MAGA. Well, I go on and on about Moya, make oil investable again. It's not investable when the market moves 7% on a week to week, intra-week, the price moves 7% as a function of its underlying price. It's ridiculous.
And Brent crude's a financial contract. It's not even a physical contract. It's not even physically settled. So it's kind of here nor there. And in my opinion, it's an antiquated benchmark. Right.
Yeah, and it shows in the level of volatility and how hard they use it to try and reinforce other narratives about what's happening in oil and in the markets. And now it's been used so suppressed along with WTI The wholesale price of gasoline is in the United States is cratered, but a lot of that has to do with the renewable identification number system. The prices on RINs have dropped tremendously, and like they've dropped over $1.25 this year.
And
so,
which is also another sham market. I've got to just
of course
tell
it
you
is.
I mean,
Of course it is.
It's like
it's equal to
it's equal to carbon credits. It's like it's based on nothing. It's like the Enron of accounting schemes.
I mean, if you want to give, I rant about RINs all the time. If you want to go ahead and do so, please. I just like to hear somebody else rant about them because I do them. And everybody's like, "What the fuck are you talking about?" I'm like, "Dude, this is like the whole oil market in the United States, and they use this to fuck with the CPI and then set the political agenda."
Completely fake. It's completely based on nothing. It's not an actual thing, to be honest.
No, it's not, but it's something that everybody has to, spend money on, and we have to pay, and we wind up paying money for. But then at the end of the day, as those prices fall, they get to then turn around and take credit for like whipping inflation when in a commodity cost push environment, the CPI is tied directly to the wholesale price of gasoline.
Exactly.
Completely. And we've been in this route for 4 years now. And I'm like, oh yeah, no, inflation's coming down. It's going to keep coming down until the election. And if Queen Kamala is not coronated at the election, then it's going to go right back up again. And then we're going to, then Trump is going to have to be dealing with 8% interest rates. I can write the script. I know what they're writing over.
I think the Fed is way too complacent in thinking that they have this thing beat, right? And if you looked at their statement, if you talked about that 50 basis points, basically they said their excuse was they were worried about the labor market. They weren't worried about inflation. And I think that is a grave, grave mistake. And I think they're going to regret that later, but we're not going to see that until 2025.
No, I agree. But I also think that Powell was lying through his teeth.
Oh, yeah.
I think he did it on purpose.
When they started asking about inflation rates, he started his nervous throat clearing thing, right?
I think it was very clear that what he was saying was like, look, we're starting to see stress in the credit markets and we're cutting 50 basis points. I'm not going to tell you that we have stress in the credit markets because that would be bad. So we cut 50 basis points and now I'm going to stand up on the podium and lie because watch what a central banker does, not what he says. Like what he says does not mean anything.
I mean, I would love to play poker with Powell because he has a tell. I mean, his tell is that throat clearing thing. I bring it up every meeting. Like when he's unsure of an answer or he's unsure about a question that he's been asked, he gets that nervous throat clear. So,
this is why Christine Lagarde wears neck scarves because you never want to see what's going on in her neck. Like, I'm sorry. Like any opportunity for me to go after Christine Lagarde and her fetish for neck scarves, I'm taking it.
She's an actual criminal.
Yeah, well, of course she is.
ECB. So
did you? I know the biggest tell for me about how bad things are in Europe is that she was on the Daily Show, like trying to, and then Jon Stewart doing the class clown thing, and she was like playing along with it, and I'm like.
Oh,
and then all she could do was like throw barbs at Jerome Powell, and I'm like, I mean, she's a pretty good actress. I'll give her that, but like, wow, hon, like you're no, like Europe is in serious trouble. I'll be honest with you. So it's interesting. I know that just one last thing. I'll turn it back over. It's like the other things that I'm seeing this morning. Literally, as I was waiting for you to come on, jump on the call, I was popping through my Twitter feed, and a guy posted up the ping me with a chart of the latest SOFR and IORB interest on excess reserve balances chart, which is it's important because SOFR blew up about 8 basis points above that for the first time in 3 years, and that's never a good sign. That's a sign that there's stress in the SOFR markets and the repo markets, that someone's desperately short of some cash, and that happened yesterday on the quarter close. Now. It's the quarter close. Somebody could be dressing their books. They could be, in trouble, blah, 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 blah. If it doesn't follow through to today, then it was a one-off thing. But if it keeps following through, then I think we have a problem. And again, I'm just reiterating the point that markets tend to go ahead of our perception of the changes, and they tend to get there first. So if Powell cut 50 basis points because he's worried that somebody was going to blow up by the end of the quarter, then that's why he did it. and inflation. He knows inflation's coming back next year. He can see what's coming in the oil markets. He knows what's happening. He's not dumb. Like, he has to go out there and spin a tail. And so he spun a tail, and I'm okay with him spinning a tail. So.
It's just amazing to me how we went from, December of 2023 when he all of a sudden did that 180 and turned dovish, right? And then the market priced in like 6 rate cuts for the entire year. And then they spent the next 6 months being as hawkish as they can to try to talk the market down, right? And then he does a 180. Then he does a 180 again. We all knew that they were going to do some sort of cut,
right.
But everybody thought at least 25. Then he does a whopper of 50 and leaves on the table that we might do another 50 by the end of the year. And then you had every other, a week after that, you had every other Fed head come out. You had Goolsbee saying, "I see a lot more rate cuts over the next 12 months." What?
Right.
What's
Bostic said the same thing, right? Well, Bostic actually undermined Powell yesterday. Powell yesterday was like, I don't know. Don't expect another big 50. And then Bostic comes right out after that and undermines him. But what was interesting about December 2023, the only thing I'm going to say is I don't really think Powell was all that dovish in the December 23 meeting. I think the dot plot pivoted, not Powell. And everybody got focused on the dot plot and thought that Powell was the dot at 0 rate cuts in December of last year. Everybody else's dot was down in the 4.4 range, but I think Powell's was still at the top. And I think he was the one who actually was able to keep everything under control for as long as possible because he knew what he wanted to do, which was he was putting pressure on Lagarde and the Bank of England for as long as possible. And, and also to force a kind of fiscal crisis on the United States and force Yellen to pivot off of her new yield curve control and all the rest of it. I think that's what he's been doing, and he'll say whatever he needs to at the podium to make that work. That's been my read on Powell all year, and I was hoping he would make it till July without cutting rates, and he made it to September. So to be honest with you, I'm okay with where he stands right now.
Do you think do you think it looks bad? Do you think it looks like it's political that it was September?
No, I think everybody who knows monetary policy knows that, if Powell was trying to help Harris, he would have cut back in March. 6 to 8 month lag time. And then it starts hitting the economy and everybody's happy and blah, blah, blah. No, I think he's strangled the market for as long as possible and then allowed it to, and then we, like I said, we just saw SOFR blow up.
Right.
We got blip higher and that's bad. So, maybe he was vindicated. And, Daniel Booth has been, screaming about this stuff for weeks now that Powell was late to the party. And again, I'm not here to agree or disagree with Daniel. Just to bring it up. Like there have been a lot of voices saying that he probably should have cut in July, but he has a different agenda. And that agenda was, he was trying to help rein in the offshore dollar markets and strangle the domestic economy for as long as he could. And then try and, walk the tightrope after that. And he got some help from the BOJ when they bombed the market in August. So I think that's what probably allowed him to go 50 this time. If the BOJ hadn't made a move, I don't think he would have gone 50. I think it would have gone 25.
That makes sense.
Right?
To me.
So,
yeah, absolutely.
If you think about the amount of tightening that the BOJ effectively did in the offshore dollar markets by cutting down the size of the yen carry trade and strengthening the yen, I think that you could kind of argue that was like a 25 basis point raise. And so Powell cuts by 50, and we're trying to offset Yellen, who's been running fiscal policy.
Who's a crazy monkey. Like
the crazy commie grandma that's running around trying to destroy the country. I mean, literally, I want to paint the woman with Joker paint.
I can't even she's been fighting the Fed this entire time, right? The Fed has been trying to rein in policy, and she's out there in Treasury selling bonds like a crazed monkey. And so it's really effectively been counteracting anything that the Federal Reserve has been trying to do.
Yes.
And to me, she's just very, very dangerous.
It is very dangerous, but it's interesting. I'm glad. I mean, you and I hadn't really had a chance to talk about this. So it's interesting to hear somebody else see the same thing that I've been seeing, because I've been saying that Powell and Yellen have not been on each other's speed dial for a long time now.
Very long time.
Yeah, that's what. Okay, and the same thing. Lagarde even said that when she was on the Daily Show. That we speak every once in a while, but we don't coordinate. I'm like, yeah, no shit. Like, really?
Obviously,
I have 3 letters for you, Christine. TPI. Like, you wouldn't have had to put that in place if Powell hadn't raised interest rates 5% in 12 months. You whore. Like, oh God, I hate that word.
I think the ECB is becoming pretty much obsolete. I mean, Europe in general is in big trouble. And I know everybody argues DAX is on an all-time high, but really we're watching like the literal meltdown of a manufacturing economy in real time, which is just amazing to me, and the market is not the economy, you guys. So I don't care if DAX is at the all-time high. We're literally watching the meltdown in Europe of the strongest manufacturing economy they had, right? Don't think that's not going to filter down to everybody else, because it is.
Yeah, no, it's funny. This is one of the things that really annoyed me, or not annoyed me, but confounded me this morning when I woke up, which is that German bond yields were down 10 basis points this morning. Not because American bond yields were down 10 basis points. The spread blew out by 10 basis points. I'm like, how badly is Lagarde sitting on? Oh, and then the euro fell out of bed. So she was defending, she's defending the German 10-year at lower and lower yields in order, which is weird, which is insane, right? And the rank and file European investors flooding into the DAX because they have nowhere else to go, right? I mean, where are you going to go? You got to buy German 10-year at 2%? Like, what are you, out of your fucking mind? Like, know. So I mean, just to underscore your point but that's part of the reason why the DAX is trading the way it is. The same thing is why the Dow is trading the way it is. Yellen pushed the 10-year U.S. bond from 4.75 back into the mid threes. Like, these bonds are overpriced, and so where do I guess we go into stocks because we don't have anywhere else to go.
Go into the equity markets, because where else are you going to go? I mean, I guess you got money still flowing into money market funds. Sure. But
the thing is, think of it this way: we moved I don't know. I don't do the bond calculations. I'm still not a bond guy. But you moved the U.S. 10-year 110 basis points, and in the same time frame, you've moved the Dow up about 10%. So bonds have risen in price, 25%, 30%, and you've seen a 10% move in the Dow. So if you're a big money manager and you're trying to move money into something that's relatively safe without moving price, we would expect to see a lower move in the Dow than we would in the 10-year over that time frame, right? So it makes a little bit of sense. So I think of it that way.
Absolutely. And cool. You still have, and we still have, gold market still moving high. So the gold market thinks something's very wrong.
Well, no, I love what I'm seeing in gold.
I'm a big fan of gold. I have been a big fan of gold. I just, I'm surprised at how quickly it's made its move. Like, to me, because I'm a longtime gold fan, I don't really like hyperbolic markets. I would like it to chill out and go sideways. What I would like to see, this market kind of chill out a little bit, maybe go sideways for a little bit to make a next move higher. I don't like these kind of parabolic moves. I mean, one could say that it's not exactly parabolic, but I just don't like too far too fast, because then you have you have a mean reversion, and I don't really like that. But I do think gold could go much higher. I just think that I would be fine with seeing it just chill out a little bit.
Yeah, absolutely. I think I want to see $200 up, $100 down, $200 up, $100 down. I want to see it's like fight every like major round number thing, and then we go from there. So yeah, that's what I would like to see in gold as well. It's going to be, but I don't know that it's going to happen. Like, if we get a discordant event like we've got going on in the Middle East, anything is possible, right?
Well, absolutely. I'm bullish on commodities in general. Even oil over the long term, just because I know what the supply, the supply situation looks like. And I mostly track energies, base metals, precious metals, agriculture, basically the whole gamut, except for maybe meats.
So knowing that I literally, folks, I'm on backup power. I don't know how long the UPS that's running my Starlink is going to last. So we're going to have to probably cut this episode short, and I'll have to have Tracy back on in a little bit. But so tell me what you think is coming for the next, I don't know. What are you seeing? I'm actually very interested to see what you have to say about what's going on agriculturally, because I'm not really following agriculture very closely, but it looks to me like everything's hit the new floor, which used to be the ceiling, and now we've hit the new floors, and so are we going to bounce off of that or what?
I think agriculture, it's taken a beating, right? We've seen everything else soar and it's done nothing.
Mm-hmm.
But if you look at the fundamentals of, the situation here, we're talking, corn's trading at $4. It was trading at $4 in 2012.
Right.
Actually, 2012 is when we hit $8 corn. But,
right.
20 years ago, it was still trading 20 years ago, it was still trading for. These farmers aren't making any money, right? No. Because it's still the same price. Now, adjust that for inflation. What does $4 look like? Now, $4 looks like,
$1.50.
Really bad.
$1.50.
Right. Really bad. And so, and we're seeing a lot of, unfortunately, we're seeing a lot of farm consolidation right now. We're seeing a lot of BlackRock buying out farms, Bill Gates buying out farms, a lot of little guys going under. And so, I think, in my opinion, that this is a very underwatched market as far as what is going on. And this is not only happening in the United States, this is happening everywhere.
Yes, it is.
And so I just think, we've seen such a pullback at these levels. I don't think it would be bad to start looking at this, in 2025, whether that be, options or however you kind of want to play that, because these prices are not sustainable. They're just not sustainable, because all we're seeing is demand grow because people need to eat. And, and it's one of those things. It's not like, you can just have people starve. You can do without other stuff, but you really can't
really do without food. Well, they are trying to kill us all, Tracy. So, you think of
they'd rather you just eat bugs. True.
Well, agreed. Or just die. And, we've got a pod for you, and we'd like to assist you in your suicide to help the planet.
Oh my God.
That as well.
Right? Canada. I just moved from Canada. Let's not talk about me there.
Okay, I'm sorry. I didn't mean to bring up such a painful memory.
I was traumatized there. So
I only ever visit Canada for a couple of days, and then I run home screaming. I take the deals that I can get with the strong dollar, and then I leave.
I lived there during COVID, and it's traumatized me for life. So I moved back.
It's so funny being a huge hockey fan and a huge Rush fan, and it's so sad to watch. Like Canada, I used to be a kind of an honorary Canadian at one point, and I'm like, I even have my little I Heart Canada mug. I can't show it in public anymore.
Right? Seriously,
no, can't do it. Not until they leave.
Story, but and so I think looking forward, I think really people should start focusing more on the agriculture markets, because they've been so beat up, and there's just no way we're seeing problems. Again, with farms, with consolidation, with farms going out of business, and not to mention, we're seeing some weather patterns change. And so, you see a country like Russia, for example, that's a huge wheat exporter. They've been having problems for the last couple of years. Also France, another huge wheat exporter. And so I don't know. I think people might want to just keep a closer eye on that market.
I just think that if we're staring at oil going, I can't see oil staying in the 60s to 70s. I think oil has to go back into the 90s. Even just the frackers here in the United States, they're not making money at $60 a barrel, $65 a barrel either. And the natural gas prices finally in the United States are getting off the schneid. They're back up into around 280 or so, a million BTUs. And copper is the canary in the coal mine. Copper and silver are the canary in the coal mine. So they're the ones telling you.
Loves the silver market, but I've loved the silver market. And I think that if you're looking at the silver markets, really, if we can hold over $30,
Mm-hmm.
right now for some length of time at least.
Yep.
Junior miners are where you want to be at that point, because
Agreed. Yeah.
you're going to get so much more from that play, because kind of the big miners, right? Then
Right.
they've kind of played out, right? They kind of had their time already, in my opinion, and you're going to see junior miners really start performing well. But again, I want to see silver prices hold over 30 for at least some sort of length of time.
Yeah, no, I think, well, I think it's really clear that someone is what needed silver under $28-$29 to get out of there. They had a hedge. Someone had, I think it was BOFA had a hedge book problem
Forever, yeah.
with the silver short. I was talking to Vince about this, but it's just like it's even worse now. Like they dumped something like $293 million on the market on Friday to keep it under $32 on the weekly close, and then we had the quarterly close at around 31.30, which was still a very strong monthly and quarterly close yesterday. Not a new high, right? But certainly didn't close above the previous highs, but it closed above the previous high closes, which in gold and silver become very important technical levels. So we get that. And then we get a couple of we string a couple of weekly closes in a row above $31 or even $30, as you said. And I think that 32 falls, and once 32 falls with how short this market is structurally, we go to 38 almost immediately.
Yeah,
silver will get discontinuous.
Yeah, I was going to say we could see $40 easily, in my opinion. And, it's another market that's sort of like oil, in the fact that the paper market is so dislocated from the actual physical fundamentals. It's ridiculous.
It's not even that. It's actually, again, it's disconnected from the actual physical market. Like so many of the Chinese companies are buying the concentrate and the doré directly from the South American miners, shipping it back over to China, and then refining it themselves. And it's not showing up as silver inventory, or it's not showing up it's not showing up in the exchanges, obviously. So there's no supply there. The COMEX is being drained. And
we're putting in like a 260 million ton deficit this year. Yeah. That's more than the last 11 years of surplus that we had.
It's an insane number, and demand is only going higher. Need for silver, the need for silver industrially, and it's an industrial, and it's a strategically important industrial metal.
Absolutely. That's been my argument. I've been talking about this for 3 years now. Right. And I will be vindicated in the end. But
if you started talking about this 3 years ago, then when silver was hitting like 17 and 16, you have been vindicated. We have at least doubled in price. It's still range bound between 16 and 31, but
but yeah, what people don't understand is not only a precious metal, which is a store of value, but it also is an industrial metal, and that is not going away soon. And I think what's really interesting, anecdotally, is if you were, talking about battery storage, because everybody wants all these, all this green energy, which we have no storage for. But Samsung just came out with a solid state battery, which requires even more silver, even though the storage capacity is better than lithium ion, and is lighter for automobiles, so you can put them in automobiles. They're lighter, but a ton of more silver. So I mean, I could go on and on about how much silver demand is out there, but that's just kind of one example of what people are being prepared for.
And the thing is that even if you just, I don't even like. I'm not even interested in silver as a precious metal anymore. I'm only interested in it as an industrial metal. And the way I look at it is like silver and copper together are like two sides of your leading indicator. Like you have Dr. Copper for the industrial side of the economy. You have Dr. Silver for the technology side of the economy. And they both will tell you where we are. And they're both screaming that inflation's coming back and that oil is mispriced.
Nobody's paying attention.
Right. And well, I am, and I've been screaming about it. And so, copper hit $4, and I'm like, oh, this is time to buy. I mean, the industry just starts.
It held that. it held that $4. Like everybody was like, copper's peaking. It hit what, 450, and then it came back down to a little over $4. But literally, it hit support and then bounced straight right back up. And again,
Right.
I like that move because I like the fact that was a parabolic move. It was a lot of copper short squeeze. That I mean, on the demand side's there, but I mean, a lot of that initial move to 450 was a complete squeeze. And so I like those markets that come back, you test support, and then you bounce right back up. Yeah. So it was actually, that market looks strong.
Yeah, no, it was actually 504 was the high end copper back in May, and then it crashed back to 4, hit a low of like 390 or something like that. It's like I track copper all the time, and then the bounce back off of that $4 level back into the 450s, 460s. It hit 485 the other day, and then pulled back. It was crazy. Like I know, and so. So that market was historically short. Oil was historically short the last time it dipped into the 70s.
It is still historically short. It is literally still historically short. I mean, if we get above, I think you're going to see a massive short squeeze if we get above $75, because literally everybody is short this market. Yep. Either short or disinterested, but it is historically short right now. I mean, literally since the contract started. So
yeah, it's going to be crazy going from there. Unfortunately, I don't know how much time I have left, so I'm gonna cut it off here so that we don't just have the episode ended and I have to fix it in post, which I'd rather not do. I'd love to sit and chat with you for another 45 minutes or so, and just whatever, but I really unfortunately can't because of Helene. So we'll just have to schedule another one of these soon, and we'll just do it again.
Absolutely. Thank you so much.
No, thank you, Tracy. I appreciate your forbearance and your patience with my situation here in North Florida. So we'll see you soon. Well, we did this on Tuesday, October 1st. I'm publishing it this morning on Thursday, October 3rd. I can say that my power is back. So, and we're doing our best here. So, thank you all for tuning in. We'll do this again soon. As always, you can follow my work over my blog at tomluongo.me. You can follow me on Twitter, TFL1728. You can follow Tracy on Twitter at CHGRIL or CHGirl. And you can sign up on the Patreon for Patreon/Gold Goats and Guns, where you can sign up for the newsletter and or the twice weekly market reports, and do the thing and try and make sense of a world going mad. I hope you enjoyed it. You guys be well. You take care. We'll talk soon. And keep your stick on the ice.